Good afternoon, everyone. I want to welcome you on our new webinar, Fishing for Yield in Northern Europe. Today, I will be acting as the co-presenter of this webinar. I'm the Chief Investment Officer at Azzopardi Financial Advisor. A quick introduction of Merrill Investor Channel is the first time with us. In 2020, we spoke about our strong convictions, Asian economic resilience, semiconductor dominance, and energy transition. 2020 was a difficult year, but the implementation of our strategic view was a success. In 2021, we'll continue to explore with you our strategic visions related to our Merrill funds. We also provide you with insight on the specific topic as artificial intelligence and machine learning. In conclusions, we hope to have you on board this year, and I invite you to visit our website if you wish to know more about what we have to offer. Today's agenda, I will explore with you the current context for yield in Europe, but before that, I will discuss ESG trend. I will finish my part with the current pandemic situations in Northern Europe. The second part of the presentation will be covered by Marc Azzopardi. He's a partner and founder of Azzopardi Financial Advisor. The company has 18 years of existence. He's the co-portfolio manager on Merrill Fund. Marc will guide you on the Northern European high-yield market, and he will go into detail on our portfolio holding. Let's start. We cannot start our webinar on Northern Europe without talking about ESG. We have witnessed since 2019 an incredible acceleration in the direction of ESG fund from a passive and an active perspective. In 2020, we can see quarterly inflow nearly of $30 billion per quarter for active funds. The active funds are dominant. However, the trend for passive speed up at a fast speed. Let's go on the next slide. We know that the active funds are struggling to survive. The amount of outflow since 2015 is equivalent to $1.4 trillion. On the other side of the spectrum, ESG equity recorded a positive inflow of $200 billion for the same period. Let's have a look on the next page what the popular name on the ESG space present in the MSCI world. We can identify at the top of the list one of our favorite, Taiwan Semiconductor. I can recommend to you our last Bright Talk. Marc explained in detail why we invested in this company, a dominant player in the semiconductor industry. Now, let's go back to our main topic. As you can see, 8 of 20 these companies are located in Sweden. When you think about Northern Europe, you think sustainability. It's not a surprise that you can find at the top of the list Sweden, Denmark, Germany, and Finland. They are not followers, they are true leaders in this space. No doubt that Europe is a pioneer in this area, and the Nordic are leading the way, gray line. In the US, ESG seems only at the early stage, and the scoring is very low. You can see on the dark blue line. Environmental, social, and government criteria are now at the center of our investment process. We are following a trend which is structural. Our investors are looking for stability from a different angle compared to 10 years ago. In conclusion, these companies located in these regions are an example for us how to manage the future. On the previous slide, we spoke about inflow and outflow, which is a question of supply and demand. In 2019, the Norwegian sovereign fund sold 42 companies following an assessment of ESG risk. It is the world's biggest sovereign fund. It had an impact, and it will continue to have an impact for the demand in perspective. Now, let's have a look about the high yield. Everyone is looking for high yield in this low interest rate environment, especially if you are based in Euro. High yield funds remain an attractive asset class, as you can see on this chart. By the way, leverage loan, which used to be a popular for investor, lost attractions. On the next page, high yield credit seems to offer one of the best risk-return profile with a Sharpe ratio which is above 2. A traditional investment in equity as S&P 500 or Nasdaq provide a Sharpe ratio below 1. Investment credit has a negative Sharpe ratio. No doubt that the central bank around the world are supporting in an indirect way the high yield market. Let's have a look about Europe on this chart. Regarding the European investment grade market now, 35% of the bonds have a negative yield. At the beginning of 2020, this portion was at 0. Like I said in the previous slide, the central banks are playing a key role with a massive injections of liquidity in the financial asset. How is the curve? Let's see on that side. You can see here the European high yield curve for less than 5 years on the senior bond side. Prime bond A to AAA are in the negative territory, triple B plus flat, and triple B close to 0.10. With this type of environment, high yield could be the only choice, especially if you are a pensioner and you want to focus on income. What's going on the sovereign side? Since the pandemic started, we have witnessed a convergence of yield from Germany and Italy. The Italian yield remained in positive territory compared to Germany for the last 10 years. Now, let's have a look what's about the macroeconomic pictures for Northern Europe in 2020 based on IMF figures. The world was in contractions at minus 4.4. Denmark and Finland were in line, and Germany and Holland a little bit worse. And Norway managed to have a mild contractions at minus 2.2. On this page, let's discuss briefly COVID-19 for Northern Europe. Unfortunately, the controversial Swedish model has not performed well in the second wave. On the other side of the spectrums, Norway and Finland have maintained the pandemic in a real efficient way. So, conclusions, it's a mixed picture for Northern Europe. What's the impact of the pandemic? As you can see on this chart, the impact on the economic activity is not very good. China and Japan, which had a mild impact, but the rest of the world is in a deep negative territory. And I would say Europe is not doing very well. Let's have a look and let's have a hope on the vaccination campaign. We hope to provide a solution for the pandemic. Israel, Dubai, Bahrain are leading the way with an aggressive vaccination campaign up to 25% of the populations. Unfortunately, Europe is below 5%. As expected, Asia is at the better stage in this vaccination campaign. Singapore is targeting 80% of its population for Q1 21, and Japan should be between Q2 and Q3. I would like to finish this part with these two slides. The equity market is definitely on fire since 2020. The allocation to this asset class is equivalent to the level of 2000 during the dot-com bubble. And my last slide, I would like to finish with this chart. This is semiconductors chart are reaching the sky. We like not to complain as Taiwan Semiconductors and ASML on the top of our convictions. Whatever, as a fund manager, I will ask ourselves the sustainability of this trend. And sustainability is a key word for us in 2021. I would like to thank you for your attentions. And now, Marc, it's for you. Please guide us on the second part. Thank you again.
Thank you, Marc. Hi, everyone. So in the next few slides, I would like to cover a couple of bond names we currently hold in our Merrill High Income Fund strategy. So to continue on the ESG theme, we may start with Momox. Momox is Europe's leading e-commerce company and one of the top-selling digital companies with almost 20 million customers and more than 220 million articles purchased and sold over the course of Momox's 15 years history. The company operates local websites and mobile apps in Germany, France, Austria, Belgium, and UK. We like this company, firstly, from an ESG perspective. As Marc said, the company saves thousands of trees through reuse of books. It saves billions of liters of water through the reuse of fashion items and books, and saves around 90,000 CO2 tons annually. From a credit perspective, the company generates its margin through a proprietary pricing algorithm to purchase used items through its apps and websites, and sell the items through its own websites, such as Momox, and third-party platforms, example, Amazon and eBay. We also like this company because it has produced consistent growth, even in the 2020, during the pandemic. Here I'm quoting the CEO, Momox has done stronger business through the corona pandemic than if the crisis hadn't existed. According to the CEO, the revenue will reach 310 million in 2020 when compared to 250 million in the previous year, a 24% increase in revenue. Momox circular economy strategy has yielded consistent growth over the past years and strong cash conversion. When they came to market with their bond issue, it had a 2.7 times net leverage, and now, based on the Q3 figures, this came down to 1.9 times net leverage. With estimated revenues, the deleveraging is projected to continue. We participated in this primary market back in July of this year with a yield of 6.25. Today, despite the price increase, having a spread of around 610 basis points, we believe it is still providing an attractive risk-reward profile. Moving on to our second name that we have for you today is Bulk Infrastructure. Bulk is an industrial developer, builder and operator of Nordic data centers, dark fiber networks, and industrial real estate. We particularly like this company and credit, as it is well positioned to capitalize on secular trends, such as higher demand for logistics solutions due to a rapid increase in e-commerce. Apart from being an established brand with leading market positions, it has also 14 years of successful track record of profitable industrial real estate development. The company has an average market share of around 30% in the industrial real estate market in the Oslo core logistics area. Another trend is digitization, which is growing at an exponential pace. Data generation is on a double-digit growth trend, and therefore data center demand is on the increase. Something about Norway for sustainable infrastructure, the Nordics has a strategic location combined with short distance to global fiber network routes and cold climate. As a note, building data centers in colder climates can significantly reduce energy usage, and data centers require a lot of cooling. Bulk is already positioned to meet this demand through its digital infrastructure, both from fiber network and data centers. Furthermore, the facility in Kristiansand is located at a regional substation which is powered from hydro, which is obviously highly CO2 efficient. The fiber network contract with Amazon Web Services is also a testament to Bulk's position. It also boasts of strong partnerships, the likes of Google and Facebook. Adding to this, we also note that recently a large global investor committed a significant capital injection of 1.5 billion Norwegian kroner, which is very positive for the credit. We have participated in the tap issue in September of last year with a spread of 424 basis points, and despite the recent tightening, the yield of approximately 3.9% today is still providing value considering the recent capital commitment. Moving on to another industrial developer, Storm Real Estate and KMC Properties, a real estate company focusing on owning industrial and logistics properties as well. It has a number of properties, of which 39 industrial properties are in the Nordics and the Netherlands. All properties have long-term lease agreements with solid counterparties, strategically located in proximity to key customers of the tenants. The largest tenant is the listed packaging and insulation company, Bevi, and the second largest tenant is Insula, a leading Nordic seafood company. This bond, or this issuer, has significant downside risk protection from a portfolio with a WALT of approximately 12 years, which is way beyond the tenor of the bond. The company actively works to extend contracts before expiry by offering tenants through upgrades or expansion in exchange for contract extension. In actual fact, into this year and in 2022, it has around 6 properties in Norway and Sweden and Denmark where there is potential of an upgrade and expansion. Majority of the contracts are warehouse contracts, meaning with the largest tenants making significant investments in machinery, wall roof piping, and advanced production lines, which is regularly replaced and maintained. That said, These properties are business critical, and the location represents key competitive advantage for the tenants. Thus, relocation will involve significant risk. With a first priority pledge, a moderate gross loan to value of approximately 58% for the group, and a strong interest coverage, the spread of 425 basis points sounds reasonable. Moving on to our last name, Storebrand. Storebrand has a strong position in the Norwegian life insurance company market, benefiting from its strong franchise, brand reputation, and long-standing expertise, particularly in the Norwegian occupational pensions market, where it is the market leader. The group's expanding asset management activities enhance diversification, and it develops its overall market position. We like this credit because Storebrand has a strong sustainable earnings. Storebrand has successfully implemented a clear strategy to shift to capital-light products like unit-linked products. In actual fact, the main source of its overall earnings account for about 45% of 2019 profits. The group also benefits from its strong position in asset management, which is historically it had witnessed healthy growth. We believe that Storebrand's capitalization will remain very strong. The group's clear strategy to capital-light products and its healthy earnings generation supports its very strong capitalization. Moving on, that said, from a credit point of view, now a brief introduction to our strategy. Merrill High Income Fund. Merrill High Income Fund has an investment objective to provide a high overall yield, whilst also aiming for potential capital growth. The fund aims to achieve a net income distribution of 3 to 4% in euro through rated and unrated bonds issued by both government and companies in the private sector located anywhere in the world. The fund may also invest to a limited extent in equities of any market capitalization unit of collective investment schemes, exchange-traded funds, and FDIs. As one can see, the fund is performing relatively better over a 3-year horizon, and then a distribution, if we go to the next slide, has hovered between 3.25% and slightly above 4%. In the next slide, we have some our top holdings in the bonds and the equities, and as one can see, the fund is highly diversified. So, for more information, one can visit our website, which is found on merrillfunds.com, and you may also download the attachments found on Brighton. Thank you all for attending this presentation, and if you have any questions, please send us an email on assetmanagement@jasminemitsi.com. Thank you once again.